To be profitable with ICT concepts, you literally only need to buy above and sell below opening price. Yet you're still overcomplicating it. Mark up the opening price and a fair value gap above it if you're selling or below it if you're buying. Today, I'm going to change the way you trade. Let's not waste any time and dive straight into the video. So, there are two opening prices we need to be aware of, at least intraday wise. One of them is midnight New York time. Now remember, these are all New York time. Midnight and 8:30. Okay, these two opening prices we use as overbought or oversold conditions. These are basically, as ICT traders, these are our indicators. Okay, we don't have indicators on the chart, but a midnight and 8:30 are both used for oversold and overbought, and we use them both differently in different contexts. Okay, so let's start by going over midnight New York. So midnight New York obviously opens up when we're anticipating buys, when we're going long on a certain day. We look for a Judas swing below New York midnight. This is to trap early sellers into the market before we can reposition, go long, and then knock those early sellers out of the market and then ride the wave for the rest of the day upwards. An example of this would be after we create a dealing range, we trade into equilibrium of it, begin to consolidate. As soon as we have a dealing range, we trade back into equilibrium below sell side liquidity, begin to consolidate. We can anticipate expansion from there. And look what happens, we expand. Now I'm going to dive into some of these days here, because these days will be key into understanding what New York midnight actually does for us. You can see as we expand, we trade and rebalance a fair value gap. I want to dive into this day here and show you what New York midnight actually does for us and what framework it can provide for us. Okay, so if we head over to this day, you can see this line is our fair value gap, our daily fair value gap. Remember that. Okay, look what happens. We rebalance the imbalance with a big drop down, and then New York midnight opens up. So the start of this candle down here, okay, this is our midnight opening price. We always mark this up orange so it stands out, and because this dictates everything, whether we're overbought or oversold. When we have a bullish bias and we have a Judas swing like this, price trades, then London trades down below this sell side liquidity and the opening price, which gives us an oversold condition. Okay, especially since we're bullish. Now remember the logic. We had expansion from equilibrium of that dealing range, and then we traded back into a daily fair value gap. New York midnight opens up, and then you can even just long below New York midnight. Like I said, this is very simple. You're still overcomplicating it. If we're bullish, long below New York midnight, and look what happens. We get expansion and then continuation upwards. Now, that is New York midnight. What I want to try to show you here with this example is also 8:30. Okay, so let's dive even deeper. Firstly, into New York midnight here. You can see price dips below this sell side liquidity. We usually end up tagging some sell side like this. This is a swing low because we have a swing high, not a swing high, sorry. We have a high to the right of it over here and to the left of it. So this gives us our swing low, and that is sell side liquidity. Okay, this gets taken with the dip below New York midnight, and then we begin to expand. You see in this wick here, there will be a fair value gap on the lower time frame, and this will be the 2022 entry model. 2022 entry model is simply dip below sell side, come up, rebalance and imbalance, and then move higher. Okay, an imbalance will be in this price leg here, and that simply is the 2022 model. That is what you'll see here on a lower time frame. Okay, that is how simple your trading can be. You do not need much more than that. Now, as for 8:30, let's have a look here at what 8:30 does. Okay, you can see here 8:30 opens up. Let's mark that up as our open so it stands out to us. Now, here's the key. On bullish days, if price is trading above New York midnight, so it already moved away from here, then we use 830 as our overbought or oversold condition. Okay, so if we've already moved away from New York midnight, you don't wait for something like this to happen at 830 where we dip back below New York midnight. No, we use, because this would be a deep retracement. That's too deep of a retracement. The algorithm, remember, we already had this huge drop down which induced all of these sellers over here. We don't need to come all the way back down here. That's not logical. Okay, so we're way above New York midnight open, so we use 830, and look what happens in here. This here signifies the open of 830 because we went lower, higher, and we closed, making it a bullish candle. This wick here is more than enough to signify that we're going to go higher. This is our Judas swing. I know it's small, okay? It's like a 10 pip Judas swing, if that. But why is that all we need? If you take a look here, we clearly have a fair value gap, okay? Remember, fair value gaps just below the opening prices. Those are the key. We have a gap below opening price after we had a dip down and rebalance this gap. We move higher towards New York, 830 opens up, we trade lower into the gap again, and look where the bodies close, up, okay? This little move down from the opening price was the Judas swing. That is all we need. Then we get a change in the state of delivery. This candle closes above the last down close candle, creating what? That creates our bullish order block. As soon as we close above it, price trades back into midpoint of it. If we measure this body, you can see where we reject from the midpoint of the body. Look where this body closes. It rejects the midpoint and then closes in the premium of this candle. And then we get serious, quick expansion to the upside. Okay, you can see in this one example how New York midnight acts as an oversold condition, and then we move away from it. If we're too far away from New York midnight, 830 acts as our oversold condition on bullish days. Okay, so now let's dive into and try find a bearish example of this happening. So if we take a look over here, you can see this candle did it and this candle did it. Why did they do it? Because we traded into an order block and traded away from it. So we're in bearish order flow. Okay, price is respecting up close candles and using them for more downside. So diving into this bit of price action over here, you can see if we mark up our New York midnight, you can already see the exact same thing happens again. Okay, the exact same thing happens where we have New York midnight, and where is the opening price on this? Opening price, New York midnight opens up, and we get a what? When we're anticipating bearishness for the day, New York midnight opens up, we get a Judas swing higher, and then start to break structure lower. We break in key lows inside here, and then we have big displacement. Rally up, there's an entry on the order block. 3 consecutive up close candles which took out buy side liquidity above New York midnight. We then break lower and trade back into them. That's your sell. And then just for the last example, 830, where does that open up? You can see the opening price on 830 is here. And what happens once we drop? Everyone thinks we're going to continue lower with this big news event, drops lower. So what happens? News engineers liquidity above the high, smooth edge. The algorithm doesn't like to let these candles, which don't have a wick, stay unmitigated. Okay, especially with that candle being 830. Remember, we want to go lower. The algorithm wants to deliver price lower, but we need as many buyers, as possible. So when this happens and we start to trade up, everyone thinks the bottom's in. They think this is support. This is strong support to retail. We are looking at it. Okay, we have a consolidation here. We expand, and then we retrace, take out the liquidity above this high, and everyone thinks this is the bottom. 8:30, rally above it, oversold condition now, on a day where we're anticipating bearishness. On these classic buy and sell days, where does the low of the day usually form? London close. London close is 10 a.m. to 12 a.m. We rally up at 9:45, so we're still anticipating the low to be later on in the day. So we trade up here. You would drop down time frame and look for an entry model. Look what happens. Run lower, taking out sell side, rebalancing imbalances, and then close over here. And that is the power of classic buy and sell days and using New York midnight and 8:30 as your overbought and oversold conditions. Your trading really can be that simple, and I hope these videos on YouTube by me are really doing that for you. That is my aim, simplifying your trading. Okay, so if you did enjoy the video, please do drop a like and comment, subscribe if you're new, and check out my links in my description as usual. Right now my mentorship is open for another 3 days or so, so by the time this video is uploaded, you will have time to join my mentorship if you want to become a student and be mentored by me. I am in the Discord calling daily levels, calling different educationals in there. I'm always dropping educationals every day, and in the chat discussing trade ideas daily. We have about an 80% hit rate on the drawing liquidities right now. So if you are interested, check out the WAP link in the description. And as always, thank you for watching. I will catch you in the next one.